Picture this. You're scrolling through your social media feed, and suddenly you come across a post about someone your age making a fortune in the stock market. Your heart races as you wonder, could that be me? But then reality sets in, and you remember the countless stories of people losing it all on risky bets. What if there was a way to invest that balanced excitement with security? Well, there is, and young Europeans have discovered it. Welcome to the Economy Unpacked Daily YouTube channel. From Wall Street to your street, we share the world of money in a clear way. In recent years, Europe's investment landscape has undergone a significant transformation. The days of young investors primarily focusing on individual company stocks are fading. Instead, a new trend has emerged, with exchange-traded funds, or ETFs, taking center stage. This shift comes as global markets become increasingly volatile and technology-driven platforms make ETFs more accessible than ever before. Millennials and Gen Z are at the forefront of this change, showing a clear preference for ETFs over traditional stock picking. It's not hard to see why. These generations came of age during financial crises and periods of economic uncertainty. As a result, they tend to be more cautious investors, valuing security and seeking investments that offer a balance of growth potential and stability. But what exactly is an ETF? Think of it as a basket filled with different assets, stocks, bonds, or even commodities. The key difference is that you can buy and sell this entire basket on stock exchanges, just like you would with individual stocks. When you invest in a single stock, your success depends entirely on that one company's performance. ETFs, on the other hand, give you exposure to dozens or even hundreds of companies at once, spreading out your risk and reducing your reliance on any single firm. This brings us to the first major reason young Europeans are flocking to ETFs: diversification made easy. By their very nature, ETFs spread risk across multiple assets. If one company or sector in the ETF performs poorly, others can help balance out the losses. This automatic diversification is incredibly appealing to young investors who are less willing to bet it all on one stock. They've witnessed the wild swings in tech stocks, the crypto roller coaster, and even global economic downturns. Diversification through ETFs gives them peace of mind and a sense of control over their financial future. The second key factor driving this trend is the lower risk and increased stability that ETFs offer. Individual stocks can be a wild ride, sometimes swinging 20% or more in value over just a week. For beginners, this volatility can be overwhelming and stressful. ETFs, with their diversified nature, tend to have smoother performance. This reduced volatility makes it easier for young investors to stick to their long-term plans without succumbing to emotional decision-making or panic selling during market dips. Cost effectiveness is another major draw for budget-conscious young Europeans. Most ETFs are passively managed, meaning they simply track an index rather than trying to beat the market through active trading. This results in significantly lower management fees compared to actively managed funds or frequent stock trading. Many modern investment platforms now offer commission-free ETF purchases, making them even more attractive to young investors, who often start with smaller amounts and don't want their returns eaten away by high fees. Accessibility and simplicity also play a crucial role in the popularity of ETFs among young Europeans. For someone new to investing, the prospect of choosing individual stocks can feel overwhelming. ETFs provide an easy entry point without the need to research and track dozens of companies. The rise of user-friendly investment apps and robo-advisors has further simplified the process, often suggesting ETF portfolios tailored to an investor's goals and risk tolerance with just a few taps on a smartphone. The preference for ETFs also reflects a long-term growth mindset among young European investors. Rather than chasing the next big stock or trying to time the market, they're more interested in steady, consistent returns that compound over time. This aligns perfectly with their retirement and wealth-building goals. ETFs are a natural fit for this approach, growing steadily with the market over decades and helping young investors work towards financial independence. Cultural and behavioral factors unique to Europe are also shaping this investment trend. Economic uncertainty, including concerns about inflation, housing affordability, and job stability, has made young Europeans more cautious with their money. They're looking for safer investment options that still offer growth potential, and ETFs fit the bill perfectly. Additionally, younger generations, especially Gen Z, have a strong preference for digital-first solutions. The apps, robo-advisors, and fintech platforms that promote ETFs align seamlessly with their tech-savvy habits and lifestyle. It's interesting to compare this European trend with other parts of the world. While ETFs are hugely popular in the United States and Canada, European adoption is rapidly catching up. However, there are some notable differences. European investors tend to be more conservative overall, while U.S. investors are often more willing to take risks with individual stocks. This cultural difference is reflected in the types of ETFs that are popular in each region, with European investors often favoring more balanced or conservative fund options. The growing preference for ETFs among young Europeans offers valuable lessons for investors worldwide. It highlights a global shift towards prioritizing diversification, stability, and low-cost investing. Even in markets where individual stock picking remains popular, the benefits of ETFs, particularly for newer investors or those seeking a more hands-off approach, are becoming increasingly recognized. To recap, the main reasons young Europeans are choosing ETFs over individual stocks are clear: easy diversification, lower risk, cost-effectiveness, accessibility, and alignment with a long-term growth mindset. This shift represents more than just a passing trend. It's a fundamental change in how a new generation approaches wealth building and financial security. We'd love to hear your thoughts on this topic. Do you prefer ETFs or individual stocks? What factors influence your investment choices? Share your experiences in the comments below. And if you found this breakdown helpful, don't forget to subscribe for more insights into global investing trends and strategies. Remember, understanding these shifts in investment behavior isn't just about following trends. It's about making informed decisions for your financial future. Until next time, keep learning, keep growing, and keep investing wisely.